The end of negative rates in Japan. Hi, everyone, and welcome to Ainslie Insights, brought to you by Ainslie Bullion, Ainslie Crypto, and the Gold and Silver Standard as the Ainslie Group celebrates 50 years. Today, we welcome back Alex, who's been looking into what I would consider to be a very significant announcement coming out of Japan. How are you going today, Alex?
I'm going well. It was a significant announcement and not a huge reaction so far. So it's going to be interesting to see.
Absolutely. That was sort of my take on it as well, that it was, in my mind, massive. And so far, the market's just taken it all in its stride. But let's start off with background. What's actually happened?
So the Bank of Japan has finally ended negative interest rates, which they've had since about 2016. Perhaps why there has been a bit of a muted response is if you actually look at Japan's policy for the last 30 years, since about 1995, they've had 0% interest rates. They had 0.25 over the dot-com boom. They had 0.5 just before the GFC, and it's been zero or negative ever since. So, they've been very low for a very long time. They're now talking about winding back some of their purchase of ETFs and corporate bonds, as well as winding back the yield curve control, which has been able to sort of hold the interest rates low in the future for so long for them.
So these are massive fundamental changes that are going to impact every Japanese person. We used to hear the term a lot about Japan's lost decade, and I don't know that everyone fully understands what that means. Can you maybe explain to us this concept of what the lost decade was?
So during the 1980s, Japan's economy boomed. So their real estate market just became super inflated, as well as their stock market. So they had these huge asset bubbles, so big that the 1 kilometer space in Tokyo, which was the Emperor's Palace, was estimated to be worth more than all of the land in California. Like, it was a huge bubble. And as well, the Tokyo stock market was actually 50% of the world's stock market at the time. So these were just enormous bubbles. And what had basically started happening around 1989, things started to deflate. From about, they refer to the lost decade from about 1991 to about 2001, which was the end of the dot-com bubble bursting. So that is the period they call the lost decade. Now, the reason they call it the lost decade is because the bank aggressively lifted interest rates. So the bubble began deflating around 1989 to about 1992. Real estate market dropped by about 70% in Tokyo, but they held their rates too high too long. It sounds a little bit familiar to what's going on at the moment. And what that actually led to was when they did finally drop interest rates. So they've had 3 years of all of their assets collapsing. At the end of this period, they dropped their interest rates to around 0%. And basically, the Japan economy became in a liquidity trap. Now, what that means is that tomorrow the house that you're going to buy is going to be less. So you just don't buy. And it self-prophesizes or self-actuates, I guess, deflation. So the lost decade refers to a period of long deflation in Japan when no one did anything, everyone saved money, and everyone just sat on their hands. So it basically became a deflationary decade.
And that's so opposite to, I know, as bullion investors, as even Bitcoin investors, we think of inflation all the time, and we just go, you want to be ahead of the curve. You need to be doing things to protect your purchasing power. You're saying there that deflation was really about sitting on your hands, as you described, because you made money, you ended up with more wealth by not doing anything at all because everything was cheaper. Like, that's very almost foreign to us here, isn't it?
Yeah, there's not many places that have had this happen, and Japan has fundamentally had it for nearly 30 years. Like, that was the lost decade, but that continued up until about 2022. So when interest rates started going up around the world, inflation started coming through, basically the yen started dropping, so finally some inflation fed through. And whereas the US was sort of getting 9+% inflation, Japan started seeing, 3-4%.
Which they
Not
hadn't seen for a very long time.
30 years.
Yeah.
And so, but now what's interesting is as the US inflation's dropping, the Japanese inflation is not. So they're both sitting around 3% now. They're pretty much line and ball, but you've got America on 5.5% interest rates and Japan just lifting to 0.
So that maybe is another area we can just explore briefly, this idea of the Japanese carry trade, because over that long period of time, it was profitable to basically make a bet against what was going on in Japan, and it paid off for effectively 30 years, didn't it?
Yeah, it did. So two things happened there. In Japan, you could borrow money at 0%. So free money. If I take $1 million today, in 5 years' time, I'll pay you back $1 million. So there was no interest on what you were borrowing. But then in America, just putting it in a savings account earned you 5% interest. So over that period, you would have earned $50,000 a year that you could have taken back. But the double whammy was the fact that because of the 0 interest rate, the yen depreciated, which made the US dollars that you bought worth more. So you got like this double boom return that the Japanese have been doing for 30 years. And that's called the carry trade, when you can leverage off those differentials in interest rates. And if what looks like is going to happen happens, which is, so the main reason the Bank of Japan actually raised interest rates is actually because wages lifted the highest they've been since the 1990s. So wages got lifted by 5.3% on average, but Toyota lifted their staff wages by 12%. Now, when you are giving wage rises, as you know, that's going to start feeding through very quickly to prices in a country. So if that's for services or goods, so Toyota cars are going to cost more. Going to a restaurant, your waitress costs more. So they know that there's a wave of inflation about to come through because of wages. Now, interestingly, that's probably not going on elsewhere at the moment. So it looks like what's going to happen is the inflation in Japan is going to build faster than other places. So they are trying to now normalize rates.
And there's so many aspects of this. I find it actually really interesting because if you think about the rest of the world, and we discussed this briefly before we recorded, like you've got the whole rest of the world never could have pulled that off. It's almost like that should never have worked, right? Like if you're Japan, it shouldn't have worked that for 30 years you could have a policy like that in place that didn't result in the inflation that we're now starting to see. We all sort of knew it would come eventually, but it seemed like it never did until it eventually did. Do you think there's like, it seems like there's going to be unintended consequences right around the global economy from what's going on there? How do you characterize some of that? Like what do you see the consequences for other countries? Could any other countries even attempt to do that? Like I can't see how that would be possible if you had the reserve currency, for example. The US couldn't do that, surely.
Well, I mean, fundamentally, it looks like Bank of Japan's going to have to do it, but they have a debt that's equivalent to about 200% of their GDP. Now, everyone's panicking at the moment with the US at about 150% or 130%. It's about to get crazy. They cannot afford to raise interest rates because their debt repayments become so high. So, I mean, they're in a catch-22. Could another country do it? I mean, at the time, Japan had the third biggest economy or the second biggest economy. I can't remember. And I mean, they've gone in and out a bit with Germany and China. They were able to do it. But so maybe at some point, parts of Europe may have been able to do it. Europe as a whole would not. The US as a reserve currency cannot. But everyone's kind of trying to follow what Japan did because it worked for 30 years without, the show's starting to end now. Interest rates are going back up, but interestingly, the forces are forcing them to go up. So wages, the yen dropping, their hand is being forced. and there's no finale yet, and people are still trying to replicate it around the world.
And that's the bit that I can't get my head around, is just how we are effectively trying to follow that. And why wouldn't you, right? Like if you're a central bank and you go, well, it worked over there for that period of time, but it really shouldn't have worked. It's fascinating to me. The one more question. We're running quite long, but I don't care because I'm really interested in this myself. So what do you think, like, to me, you've got all these Japanese people. We've talked about 30 years here where they've been under a regime of it operating in a deflationary world, right? Like where everything you've talked about. How does that transition to an inflationary one? If I'm thinking about anyone who's been living for the past 30 years in any type of environment, that you're embedded as a person in your environment. You just expect things to operate a certain way. Do you think that has an aspect to play here as well, that the Japanese people just may not be ready for an inflationary era?
Look, 30 years of deflation, and what we were talking about, a liquidity trap where you're better off, saving, not spending, throwing your money overseas, you get a bit back. I mean, it's a pretty frugal environment in its own way, I guess. If you want to compare, something that's been the opposite for a long time is probably Argentina, which had huge inflation for so long, where everyone spends every dollar they earn because there's no point owning anything because you'll be inflated the other way. But going from a frugal mindset to a let's party mindset might be quite difficult for the Japanese. But if inflation does take hold there, that will be how they feel. I mean, it's how everyone's feeling right now. Everyone is spending everything they have. No one is saving because, I mean, what for? A loaf of bread today, a loaf of bread in 6 weeks, 4% higher. No one's saving.
It's such an interesting thing to watch because we just don't really know so many of those factors, how they're going to play out. So yeah, I find it absolutely fascinating. So thank you for bringing all that to us today, because really interesting stuff. And I think we'll be back here talking about it again, to be honest, because I can't imagine that we fully know how it's going to unfold. So
no, I don't think anyone knows the finale of this. It's just the curtain's just coming up. And yeah, people, other countries are trying to follow this, like I said, without knowing what the finale looks like. So
yeah, very fun, very dangerous game to play. Thanks again, Alex. Really appreciate it.
Nice to see you.
Thanks everyone for watching. We'll chat again soon.